Let's begin. Why look beyond your borders? Investing can feel complicated. Many people choose to invest only in companies they know. These are often companies in their home country. This approach feels safe, it is familiar, but the world is a very big place. Thinking only about your home market means you might miss out on big opportunities. Global investing is about looking beyond your own backyard. It is about owning a piece of the world's growth. It is a simple idea that can make a big difference for your money over the long term. There are good reasons to think globally. The first reason is to spread your risk. If all your money is in one country's stock market, you are making a big bet on that single economy. Sometimes one country's market goes down, but another might be going up. Owning pieces of both can smooth out the ride. The second reason is growth. Some economies are growing much faster than others. Investing in those places lets you share in that growth. The power of spreading your bets. The most powerful idea in investing is diversification. It is a simple concept. Do not put all your eggs in one basket. When you invest globally, you are practicing diversification on a grand scale. Different countries have different economic cycles. One country might face high inflation. Another might be in a period of strong growth. When you own investments in both, one can offset the other. This does not eliminate risk, but it can make your overall portfolio more stable over time. Think about the sources of growth. Emerging markets are industrializing, with populations getting wealthier. Companies can grow profits very fast, but with more volatility. For a patient investor, the long-run rewards can be compelling. Global investing opens unique themes not confined to one country. From raw materials to batteries to car assembly, the EV chain spans continents. In AI, equipment from the Netherlands, chips from Taiwan, software from the US. Investing abroad is not without challenges. It is important to understand them. The most common risk is currency risk. If you buy a Japanese stock in yen and it rises 10%, but the yen falls 10% against your currency, your net return is zero. Currencies move every day and can help or hurt returns. In 2025, a weaker US dollar helped American investors. It could easily have gone the other way. Political and regulatory risk, laws, taxes, and foreign investment rules can change suddenly. These shifts can have a big impact on value. Some countries are less stable, adding uncertainty. You must accept that rules can change. Liquidity risk. Fewer participants can make selling harder without moving the price. Less of a concern for buy and hold investors. Information can be harder to find. Language and accounting standards vary. Many new global investors start with funds or ETFs managed by professionals who do the research for you. To invest in foreign markets, you need a broker. A broker executes your buy and sell orders. Your choice depends on your needs, active trader or long-term investor. Interactive Brokers offers access to 160+ markets and pro-grade tools, plus IBKR Global Trader for simplicity. If you want to trade almost anything, anywhere, consider the breadth of IBKR. Fidelity and Charles Schwab are trusted, user-friendly choices. Schwab was named the #1 overall broker for 2025. Fidelity enables trading in 25 countries and 16 currencies. These platforms pair strong service with ease of use. Decide what matters most: low fees, specific country access, ease of use, or research tools. Compare a short list, then open an account online. Once set up, the world opens to you. It is the first practical step on your journey. Certain industries have powerful long-term trends that cross borders. The technology sector is a perfect example. AI, cloud, and digital services are global. Demand benefits chip makers in Asia, equipment makers in Europe, and software in the US. Healthcare, aging populations, and rising wealth drive steady demand for medicines and services. Financial services grow as economies expand, and millions join the formal financial system. In 2025, European banks like Santander and Deutsche Bank rose about 126%. Energy transition is creating winners in solar, wind, and batteries, while traditional energy and industrials remain vital. In 2025, international stocks outperformed US stocks. MSCI All Country World ex-USA gained 29.2%. The S&P 500 rose 16.39%. An AI boom lifted Asian tech and chip makers. European markets rallied as defense spending plans boosted firms like Rheinmetall, up 154%. The US dollar fell about 9.4%, aiding foreign returns for dollar investors. Fortunes can shift quickly. Opportunities are everywhere. AI enthusiasm sent the Kospi surging almost 76% in 2025. Taiwan's chip hub soared too. Samsung jumped nearly 130%, and Japan's Kioxia rose 536%. China targets semiconductors, high-end equipment, and software under its new plan. In Japan, reforms pushing investment, wages, and shareholder returns could propel equities in 2026. ASML, in the Netherlands, makes the advanced machines that produce leading-edge chips. Without ASML's tools, there are no cutting-edge AI chips or smartphones. TSMC is the world's largest contract chip manufacturer. It builds chips designed by global leaders. After a 48% jump in 2025, analysts see earnings growth above 20% in 2026. HSBC, a British bank with deep Asian ties, offers exposure to many markets in one stock. AstraZeneca and Novartis develop medicines used by millions worldwide. Healthcare demand tends to be resilient through cycles. Other examples: Toyota, Royal Bank of Canada, and in China, Alibaba and Tencent. You do not need to buy them. Studying them helps you learn what drives growth globally. Use these titans as a starting point for deeper research. Starting can be the hardest part. Keep it simple. Start with ETFs, a basket you buy like a single stock. A single global ETF like one tracking the MSCI ACWI gives broad exposure. One fund can cover thousands of stocks in developed and emerging markets. Buy it. Hold it. Let the world work for you. Low cost, instant diversification. You are owning the market, not trying to pick winners. Later, build your own mix with regional ETFs. Example: 50% US, 25% developed international, 25% emerging markets. Research suggests international stocks could have another strong year in 2026. Example only, not advice. Allocate by your age, goals, and risk comfort. A simple plan you stick with beats a complex plan you abandon. Global investing is a journey, not a destination. You do not need to become an expert overnight. Open a broker account with global access. It can take 15 minutes. Fund it with a small amount and buy one share of a low-cost global ETF. That is it. You are now a global investor. Learn and add over time. Take that first small step today.